it's important to, understand the dynamics of how to buy a business. So this is speaking to aspiring entrepreneurs looking to buy a small business, some professionals seeking a transition out of corporate life, investors who may be either looking to back searchers or, small capital groups, or just those individuals with limited experience in acquiring businesses and they just want to learn more. So during this webinar, I will encourage y'all to stay until the end. And the reason is because at the end, I put together a 52-page guide I like to call the Business Buyer's Toolkit. This is some of my best stuff: templates, financial models, etc. So if you stay to the end, you can gain access to that instantly just by scanning a QR code on your phone. Additionally, we're going to go over actionable tools to better navigate your next deal. So that speaks to one, the individual who said they're under LOI, as well as two, people actively searching. And then the third tranche is those just started searching. Where can I start? So before we jump in, my first tip, and if you take away nothing from this presentation other than this slide, I'll be okay with it. And that is to stop planning and thinking about buying a business and take action. In the world of too much information and too many different organizational tools, notepads, etc., rather than planning how you're going to buy a business, you need to start doing it. So what does that look like? That looks like, making the goal of today to pick up the phone and call a business broker and ask him, what listings there are for sale. Or picking up the phone and calling a business broker or owner and saying, "Hi, my name is X. I'd like to buy your business," and just see what they say. There's a variety of different ways you can buy businesses, but ultimately, if you focus more on the actions of buying it, such as making that call, building network connections early, setting weekly goals, and avoiding the analysis paralysis trap, these are the ways people actually buy businesses. And it can, taking these actionable steps can go from a 2 or 3 year search to buying a business in 3 to 6 months. Next slide. So this is the advice corner. I spoke to 3 old clients of, O'Connell Advisory Group who actually purchased businesses. And I asked them the question. I said, if you were to go back in time and ask yourself, give yourself a piece of advice at the start of your search. So for those who just started searching, this is for you. What would you tell your younger self? Something on this slide, an owner said, maybe I'd tell myself not to do it because it was a crazy ride with ups and downs. Others said, for example, an owner of a commercial millwork business. He said, if I could go back to the start of my business search, I'd tell myself to focus on building relationships early. Networking with brokers and other business owners made all the difference in finding the right deal. This really speaks to emphasizing the importance of relationships. Building a network early on, it just helps you access valuable insights and potential deals that might not otherwise be available. So I encourage you to connect with brokers, industry contacts, and other business owners and explain how strong relationships, building these strong relationships, ultimately, you'll be able to find great deals. An owner of a manufacturing company said, the one piece of advice I'd give myself is at the start is don't rush. Take time to thoroughly understand the numbers and the business operations before committing. I'd like to emphasize this, and just call it out. The business needs to pencil. And when I mean pencil, it needs to cash flow a certain dollar amount in order to make sense in terms of if the business cannot generate enough cash flow, you actually won't be able to buy it because you'll need bank lending, and banks have certain requirements. And 2, you need to understand the business operations and have a self-assessment of, am I the right owner to step in and continue running this business going forward? Lastly, owner of an HVAC company said, looking back, I'd remind myself to be persistent. The right deal will come, but it's important to stay patient and not get discouraged by early setbacks. So these are 3 great pieces of advice I'd like you to think about, as you go through the highs and lows of business buying, from people who've actually, successfully navigated this journey. So why are small business acquisitions a great opportunity? There's so many things I could speak highly about. Myself, I am a small business owner. I help people buy businesses. I also own businesses. They are a low barrier to entry. You're not going up these small businesses. You're not trying to be the next Google. You're trying to be, the best landscaping company in the Mid-Atlantic or New Jersey. You have complete flexibility and control over business operations. If you step in as that majority owner, you call the shots, whether it's good or bad. You have unlimited upside based on the decisions you make. And ultimately, the more you work, the higher potential you have for growing that business and really achieving that enduringly profitable business, which you can pass on as a legacy, to your, going forward, and really building a valuable asset, which you could potentially sell later down the road. So step 1 is really identifying the opportunities, and it's the business process, the business acquisition process, and some of the resources you can do. So this chart does a nice overview of the various processes, like identifying opportunities, reaching out to sellers and brokers. Ultimately, you'll have to negotiate, conducting that thorough due diligence, which speaks to the financial numbers. And ultimately, the end goal for every business searcher is getting to that closing table, signing that purchase agreement, and really, from there, you're the new owner. So step 2, I like to call it, you need to create your business buy box. I know what you're thinking. You'd say, what the heck is a business buy box? It's really you can take a piece of paper out and write down, what kind of business do you want to buy? How are you going to pay for the business? Who's going to run the business? Is it going to be myself? Am I doing it with a partner? And then lastly, what type of business do you want to buy? Is it a certain industry? Is it a business that's only located within 30 minutes, from where you currently live? Keep it stupid simple. Ask yourself these 3 questions as you look to, begin what kind of business you want to buy. So really, the business buy box, it's a set of criteria that defines the type of business you're looking to buy. Think industry, size, business model. The business model can be, direct to consumer. Do we sell to other businesses? Do we license our product, et cetera? Again, kind of speaking to the first point about business acquisitions, in the world of too much information, I always recommend setting a strict criteria of what is your ideal business. And because once you do come across it, you'll more often than not, have to move quickly in order to gain the attention of the current owner of this business that really checks your buy box. So it's always good to have this set criteria established very early on in the process. So step 2 is researching and finding these businesses. So you've established your business buy box. Now, where do you go to look for businesses? So these are a few great resources, I've leveraged in my business buying journey. you can open your laptop and after this presentation, go to websites like BizBuySell, Flippa, acquire.com. If you've never heard of any of these websites, think of these as, almost, the Zillow of business buying. And I say that loosely because buying private businesses is not as easy as buying a home, but these websites do a great job of showing you the business listing without giving away confidential information. What does the business generate on a revenue and profitability standpoint? And how do you contact them? You can speak to a business broker who is representing one of these companies in a matter of 3 or 4 clicks. And you may even be able to get on the phone with them today if you start doing this now. Other valuable resources include industry-specific sites. So if you Google, targeted business searches, for example, if you're looking for an HVAC company in Washington, D.C., which is where I live, if you just Google HVAC businesses for sale, you may come across industry-specific sites or brokers who only represent this segment of businesses. So it's a very valuable tool. I always recommend. The last couple are broker listings. So I mentioned it earlier, but business brokers, think of these people as real estate agents for small businesses. They represent the owners, and their job is to sell the business. And at the time of sale, they'll receive a certain percentage of the total sale as their cash flow for the business. Popular brokers include Transworld as well as others. If you look it up after the conclusion of the webinar, I'm sure you'll see tons of resources. I would start speaking to these people early on in your process, establishing a connection with them, offering to go out and grab coffee with them and just talk through deals. Because more often than not, when they get new listings, you want them to think of you and send you the listings right away so you can move quickly. I found this tactic very helpful and valuable when you're looking to find businesses in a highly competitive market in those popular businesses right now, which are HVAC, landscaping, roofing. So something to think about. Off-market searching, and I'll touch on this briefly. This is really doing direct outreach to businesses that might not be actively looking to sell. There are pros and cons to leveraging off-market deal searching. One, the pro is you may be able to find an owner who will offer you a business at a much lower price because A, they're not represented by a business broker, so they don't need to pay 10% as a fee to use their services. And B, you may be able to find an owner who's willing to offer a favorable price if they're just tired of running the business. But there are risks with doing off-market deal searching. In my opinion, they're riskier deals because they haven't had that first initial review. So just things to keep in mind when you're kind of starting your business search. So how do you create your outreach strategy? We spoke on a lot of these topics. A couple things I want to double click were, if you'd like to do direct email campaigns, you could leverage email senders about drafting personalized emails to explain your interest in acquiring the business. You could do some cold calling, reaching out to business owners directly, providing a brief introduction about yourself, explaining why you're interested in their business and why they should trust you as to buy their legacy business. I will say, similar to any cold calling you may receive on a daily basis, I'd be careful exploiting this tactic just to present yourself in the best light possible. But it is a good way to get in front of these business owners who are very busy. I recommend cold calling and doing outreach on Friday afternoons. For whatever reason, owners love to talk about how great their business is doing before they head into the weekend. I think it makes themselves feel good. I wouldn't call a business owner Monday morning when they're trying to catch up from the week before and kind of establish it. So those are two kind of tips that I leverage. And then a couple other things you can lean on for your outreach. Networking, you can attend industry conferences. In the world of like Main Street acquisitions, I've attended several of the entrepreneurship through acquisition conferences. Most recently, I was at the Harvard Business School one a couple weeks ago in Boston. I've also attended the Georgetown, and I will be attending the one at Booth in Chicago in the upcoming weeks. These conferences are great to start establishing your network as a searcher, as a business buyer. And you never know who you will meet at these conferences. They could be the missing piece that gives you a great business. Initial owner engagement. So when you come across a business you really like, so it checks all the boxes for your business buy box, you've contacted them through a broker or you've given them a cold call. Here are some things to kind of think about when you first speak with them. They say, hello, my name is X. What do you say after this? You want to start developing and building rapport. You need to understand that these business owners have a deep emotional connection to their business. Approach these conversations with empathy to learn their motivations and long-term goals. Owners and successful business transactions often are a culmination of great buyers, great sellers, and motivated parties on both sides to get deals closed. If you come in as a business buyer looking to get the best price, negotiate every term, and be unwilling to negotiate any stipulation of the deal, it's highly likely you actually won't close the transaction. These deals need to be full of compromises, with the ultimate goal of you buying a business at a fair price that can support a loan and really continue profitability going forward. A couple key questions I wanted to highlight. Ask them, if they are listing the business for sale, why are they selling? They don't have to sell their business. They could give their business to someone in their family. They could continue running it. You need to understand why specifically they want to sell. Then you want to ask, what are the main drivers of the business success? How have you made this business successful? While this seems like a loaded question and they may have varying answers, you are asking these questions to understand, are you the person that can continue this business going forward? If there are certain components of how this business made money that you actually don't think you can do, that's a red flag. And this business probably isn't for you, even if it checked all the boxes on your original business buy box. Other questions you can ask them about are, high-level discussions around the financial metrics. If the business has sustainable revenue, for example, they did $2 million in the past 3 years, and they've had slow, steady growth, those are excellent traits. Ask them questions like, how have you been able to continue growing? What are some of the challenges? Have you had any setbacks lately? Most owners can really, they have recency bias, so they'll likely speak to things that are recent in the past 3 or 4 months. You as business buyers should understand and analyze a longer period of the business. Call it 3 to 5 years. Just because the business is doing well in the last 12 months should not be, the stamp of approval that you can buy this business. You're going to be holding on to this business for many years. You could call it at a minimum 5. So just think about these things when you're doing your analysis. So evaluate the opportunity. When you do sign that LOI and you ask for initial financial review of the documents, I always recommend you get 3 years of income statement and balance sheet at a minimum. And ultimately, this initial financial review is so you can answer a couple quick questions. Can the business support a SBA or private loan? More often than not, the SBA has certain criteria, which we'll speak about a little bit later, that the business needs to generate X dollars in order for them to approve a loan. The second piece is, can this business generate enough cash flow to A, support the loan you're about to take on, and B, fund the lifestyle or annual income that you want to earn in a perfect world kind of going forward. And 3, you continue to check those business buy boxes to make sure everything still jives. So step 4, how are you actually going to pay for this business? Keeping it simple, there's a few ways. For those who want to go with the SBA route, the clear-cut choice is leveraging an SBA 7A loan. This is the most popular loan the SBA offers. It's a government-backed, meaning that you don't need to previously have purchased businesses in order to qualify for this loan. While these loans are great, I will say they have a methodical process, and it takes quite a bit of time to actually go through the process of an SBA loan. So I always recommend working with like a loan broker who can navigate, he can find you the best SBA loan rate, and B, he or she has experience with preparing the documents needed in order to actually secure that loan. So this is directly from the SBA website, and I thought it was a great tool. So this shows, here's a quick checklist any SBA lender is going to ask for if you're seeking that traditional SBA 7A loan. So these are things you're going to have to be ready, prepared. You can put them in a Google folder so you can quickly access these. They include, a business plan, credit, your credit history, some financial projections of the company, some collateral, of many lenders require you to use another asset, such as your home or car, to actually collateralize the loan you're about to get. And if you have industry experience, it's often helpful to include it, but it's not required. So these are other options as you think about deal structuring. So if you want to leverage the SBA loans, the SBA 7A loan, typically that can cover anywhere from 70 to 80% of the total purchase price, typically in this market. You can go all the way up to about 90%, but more often than not, the SBA does require the buyer to put a down payment of 10%. So I get this question a lot, so I will answer it. Many people ask me, I've heard you could do 5% and 5% investor equity. Yes, that's correct. Sometimes SBA banks will want to know, the history of that investor, because they're looking for you as a buyer to have skin in the game. And if that 5% or 10% gives them confidence that you do have that skin in the game. And they also are looking for really like operating experience. So it might not be required for you to have operating experience in the business itself, but they're looking for, management experience, leadership roles, etc. So step 5, financial due diligence or high-level due diligence. Think of this as trust but verify. So when I mean trust but verify is these small businesses may not have the cleanest set of financials. They may be very profitable businesses, but they might not be the most organized. They may not have a sophisticated CFO in place. So take the time to do your proper due diligence. And ultimately, the goal is to check off these boxes. So you want to complete your financial review. Financial reviews are conducted by CPA M&A accountants who have a trained eye for these small to medium-sized business deals. Fortunately, I've been doing financial due diligence for over a decade. That's all O'Connell Advisor Group does. We are a component of your deal team. The second component is legal review. You want to understand, what are the legal issues? What are the compliance issues? Are there any outstanding lawsuits? This is completed in conjunction with the financial due diligence process, but often a lawyer can kind of help with this legal review and assessment. And if these legal issues do come up, it's best to speak with the financial due diligence partner you're working with, as well as your lawyer, to understand, is this a material deal finding? And if it is, how does it impact your deal that's currently under LOI, the purchase price which you offered, and is there a possibility that based on these findings, you're actually going to have to go back to the owner and try to retrade? No one likes to retrade a business deal, so please do be careful when you are considering that, because I have seen deals unfortunately die because of this kind of retrade. The last couple of pieces I'll touch on: the operational review and risk assessment. These are things that can be conducted via a market research study. This is a component of my financial diligence. We assess the key management we assess the key management of the business you're looking to buy. Who are the key employees, and what are the significant risks? Is there customer concentration? Is there old inventory that the owner wants me to buy, which I may not be able to sell? Are there system issues, which we will need to upgrade our systems and inject more capital on day one of ownership? There's a lot of dynamics. My overarching advice would be to trust what the owner is saying, verify the financial data is accurate, and arm yourself with the proper deal partners in order to meticulously analyze this business with the end goal of, is this business right for me at the purchase price I'm paying? And if that box is checked, you can feel confident moving forward into purchase price agreement and that closing time. So assuming we got through due diligence and we got to the deal closing, congratulations, you're almost on your way to buying a business. Last couple things I'd like to call out is, ultimately, once you sign the purchase agreement, you assume the duties as a new owner. This purchase agreement should be conducted and drafted by a formal, SMB lawyer. There are plenty in the space. I'm happy to give you some of my Rolodex I often refer out to. And the reason why you need to pay up for this agreement is, if things go south when you assume duties as that new owner, your only legal ramifications are going to be in this purchase agreement. If you had loose word of mouth arrangements, none of that matters. I've seen deals go south after close, and ultimately, a settlement or a judge is going to review the purchase agreement and basically follow that like the Bible when you're having these disputes. So, make sure you spend that $5,000, $10,000, $15,000, $20,000 to get that purchase agreement drafted correctly with the language you want in it. Because if you don't, you could lose millions. Once that agreement's signed, you assume new duties as the owner. And really, the last thing I'd like to call out as you become this new owner is, ensure you sustain business operations in the first 0 to 90 days when you're the new owner. There's so many things you need to do, such as integrating the employees, understanding how the business runs on a day-to-day basis. I've actually seen businesses decline in these first 0 to 90 days. So just make sure you're keeping the business on, keeping the lights on, and moving in that same direction as prior to when you became the owner is very, very key. So a couple more real world success stories, which I wanted to call out. Success story one is John. He was an old client of ours. He acquired a niche retail business. He leveraged that SBA 7A loan, and based on his business plan, his credit history, and the SBA bank he chose, he was actually able to finance 80% of that loan, which was about $800,000 because it was for a $1 million purchase price. The other 20% he funded through a 10% buyer down payment, which is roughly $100,000 for a number of people out there. And 10% was a seller note, which basically was a 2-year seller note passed back to the old owner, which he would pay on a monthly basis. The second success story is from Sarah. This one's a little bit different. She acquired the business and did such a good job. She became a passive business owner. If you listen to the Acquiring Minds podcast, Will Smith, who's the host, he talks about, this is the dream. You buy a business, you use an SBA loan, you run it so well, you can hire a general manager, and basically you can take yourself out of the business. And now, you have a passively generating asset, basically, in the future forever. So Sarah acquired this commercial landscaping business. After 12 months, she hired a general manager to basically take on her day-to-day duties. And now she only spends 5 hours a week on the business, really doing check-ins with her general manager and overseeing the business on a high level. And, she's doing great. Very excited for her and seeing, where this can go.